Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastop Jr.
Welcome back to the Ask Ralph Show. I thought we'd take another look at our Ask Ralph mailbag. Just remember, you can submit questions to Ask Ralph by sending an email to ralph@askralph.com. Again, that's Ralph, R-A-L-P-H, at askralph.com. Here's a question from Jennifer, who lives in Milford. I just don't understand why the state of Delaware sent me a 1099 form for the amount of the refund we received last year when we filed our taxes. I asked my neighbor, and she told me that I had to put that information on my return this year. But this was money from the previous year. Help me, I am so very confused. Well, Jennifer, you're not the only one confused by this. This is probably one of the most common questions I get when I meet with clients and go over their tax documents. You should receive a 1099 from the state if you received a refund in the previous year. Now, the big question is, and if you're working with an accountant or a tax preparer, they probably have a copy of your return from last year and they can handle this for you. But the major question is, did you itemize or take the standard deduction? Well, if you itemized, then this will represent income to you because you effectively took a greater deduction than the amount of tax that was due. Now, if you took the standard deduction, you can just ignore this. But Jennifer, that was a great question. This question comes from Harry, who works at Delaware Park. Harry writes, I just started my job at the slots and I'm working with the Players Club. I don't understand why I've been getting all these questions about gambling loss statements the last week or so. What's the deal, Ralph? Well, Harry, here's the deal. Players cards are basically used to track losses. Now, you would ask me, why do they worry about that? Well, if someone has gambling winnings, they're entitled to take a deduction up to the amount of winnings for any losses they have. Well, one of the best ways to handle that is to use a player's club or some sort of loyalty card so that you can keep track of these expenses. So that's why they're asking for this, because they're going to need to give this to their accountant or use it when they prepare their taxes. Now, Sarah writes, I was laid off from my job this past August and I've been receiving unemployment benefits since then. When I filed for unemployment, I was asked about deducting taxes, but I really needed the money at the time. Is this going to hurt me now that it's tax time? And my answer to this, Sarah, is it might. And that's because unemployment is taxable income and has to be reported. Now, you brought up a very good point, and that is, when you're getting this unemployment income, generally it's less than what you're used to making. But they do give you the option about withholding federal tax. You're going to need to mention this to your tax return preparer or accountant, or include this as income on your tax return. And what I will tell all of the people listening is, you might want to consider paying taxes on this as you go so you don't get stuck with that bill at tax time. Now, Brian from Ellesmere sent us a note asking, I got behind on my credit cards a few years ago and asked for help from a credit counseling company. They worked out payment plans with the credit card companies, and I just finished making those payments last year. When I got home today, there was a letter and a 1099-C form in the mail. It says that they reported $5,000 in canceled debt. What do I have to do with this? Well, Brian, that's a great question. And here's the answer. Anytime someone cancels debt, they will generally issue a 1099-C. Now, the reason they do that is cancellation of debt is considered income. Now, there are certain rules that would eliminate that from being reported, one of which is if you declare bankruptcy or if you're considered to be insolvent. Settlements have an after effect, but generally this is a much better effect than if you had paid the debt off in full. So you're going to want to talk with an accountant or a tax preparer and see if you were able to not include this income because of bankruptcy or insolvency. Here's an email from Karen from Westchester. Hey, Ralph, my husband and I met with our tax preparer the other night and we're getting a great refund, about $7,000. But she told us that this is not necessarily such a good thing. I guess I'm confused. I thought the higher the refund, the better. But she mentioned something about changing our deductions so we don't get such a big refund. I am still confused. Well, you know what? Karen, when I first started my practice, I used to deal with this question all the time. And it would be two schools of thought here. One school of thought is, these people would come in to see me, they want to get a real big refund. And I was so happy to tell them they were getting back a $5,000, $6,000 refund. But then I had another, practical side of this that said, well, you know what? This is your money to begin with. If you're getting a federal refund and you're not getting any credits or things like that, this is basically money you've already paid in. So it's really an interest-free loan to the government. When, and I've heard people say, well, you know what, Ralph, this is the only way we can save money. Well, that's fine. It's not necessarily the best thing to do, but I've heard people say, well, that's our spring vacation money or that's our summer vacation money. But maybe a better choice would be to get that money as you go and pay down on your debts. And the way you would handle that is, change your W-4 at work, and increase the amount of your dependents, which would effectively decrease your deductions. I received a phone call the other day from Dora, who lives in Townsend. Dora said, my husband and I are both retired and really don't have much income. I was wondering if we even needed to file a tax return anymore. Well, Dora, I hate to chase away business, but it really depends on your income. And what I mean by that is, how much income did you have? What's the character of that income? One of the big questions I ask clients here is, did you have any withholding? And if you did have withholding, maybe you can eliminate that withholding moving forward. Social Security is a big question mark here, and there's Social Security earning limits. So in other words, your Social Security might not become income if you earn less than a certain amount. So this is something you're going to have to really study and make sure that if you had taxes withheld, then you most likely want to file a return to get those monies back. Here's a note from Greg, who writes to us from Newcastle. I heard on the news that I don't have to have health insurance anymore because a new tax bill eliminated the penalty for not having insurance. Is this true? Well, Greg, I've got good news and bad news on this one. No, it's not true for 2017, but it will be true for 2018. What you're going to need to have if you had no insurance is you're going to have to pay a penalty. Now, if you did have insurance for part of the year, you should receive potentially two forms, a 1095A and a 1095B if you were covered by an employer health insurance. Now, there are other exceptions against the penalty, but for tax year 2017, the penalty is 2.5% of your total household adjusted gross income, or $695 per adult and $347.50 per child, up to a maximum of $2,085. For tax years 2018 and beyond, the penalty amounts have not been announced because they've been eliminated. So in 2018, this goes away, but in 2017, this is still an issue. We received this email from Gage in Middletown. I just got my first W-2 from my very first job. My dad was working on my tax return, and he noticed my Social Security number on my W-2 is wrong. What do I do now? Well, first of all, Gage, don't panic. And it's great to hear you have your first job. What you need to do is contact your employer or your former employer if you're not working for them anymore, and ask them to issue what's called a corrected W-2 or a W-2C. And one of the things I always tell people is, make sure you check your information throughout the year to avoid this when it comes to be tax time. Another thing that you want to make sure you do is if you change jobs and you decide to move, or you move out of town or to another place, you want to contact your former employers and give them your new address. This is a very important thing because if not, the employers aren't going to know where to send these forms. Look at your pay stubs throughout the year and make sure that your information is correct so that when it comes to tax time, you don't have these issues. Again, I thank everyone for these questions, and I'll remind everyone to get your question on the air. Simply send us an email to ralph@askralph.com.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.